The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. Thank you for joining us. We will be starting at 2 o'clock, but we wanted to open up the line so people could get logged in and get situated. Thank you for joining us. You can see Mitch Clinger is here, ready and waiting.
Hi, everybody.
Good afternoon, everybody. Thank you for waiting. We'll be starting right at 2 o'clock. We just turned on the system a little early so people could get registered and signed on. And I'll be doing a little bit of that boring reading that nobody likes to hear, but has to hear anyway. Okay, good afternoon and welcome to AICC's webinar today, Legislative and Tax Relief and its Impact on Manufacturing with Mitch Clinger. I am Taryn Pyle and I will be hosting this call today. Additionally, you will receive a copy of the recording and presentation via email if you are new to AICC webinars. We welcome you. AICC, the Independent Packaging Association, is dedicated to uniting and celebrating the success of inspired independent packaging companies through education and networking opportunities in person, online, and in print. When you invest and engage, AICC delivers success. If you want to learn more about all that AICC offers, please access our website. As you all know, we have free e-learning courses available to all member companies and their employees. I notice a lot of you are taking advantage of that. If you have not taken advantage, please get in contact with us and we'll show you how to get your company and all your employees set up. We have a few housekeeping details today before we get started. The call will be 60 minutes long. A link to the recording will be available at aiccbox.org/COVID, the Monday following the call, along with any materials discussed or offered. I do want you to know that on these calls you can hear us, but we can't hear you. So let's do a sound and chat test to make sure you can hear me and we know that people are on. Please introduce yourself or raise your hand and let me know that you can hear me today. There we go. Thank you. In the event we go over the time allotted, any other questions can be sent via email and AICC staff or the presenter will follow up individually. With technology, there's always a possibility of losing a connection, sound, or viewing of the presentation. AICC will keep you posted on the status of any problems using the chat feature. If you get a dial tone or are disconnected from the site, you will need to call back in. This would indicate a connection problem on your end. For this call, I want you to know that you can raise your hand if you have a question, or you can post your question in the question box. Mitch would like us to interrupt him when the questions get posted, so we will not be holding it till the end of the meeting. However, any questions that are not answered and posted will be listed at the end, will be talked about at the end of the call as well. As we begin, please remember AICC is an international trade association, and as such, members are bound to uphold the letter and spirit of all applicable competition and antitrust laws, including those of the U.S. and Canada. During this meeting, there will be no discussion allowed concerning prices, customers, customer market allocations, specific accounts, discounts, terms, and all other matters prohibited by law. We will have to end the call immediately if there's any violation of the antitrust laws. I'm going to now turn the mic over to Mitch Clinger. I think you all know him, so we're going to do a short little bio. Mitch Clinger is a CPA, is a partner of the CPA firm of Clinger Nadler, LP, in Fort Lee, New Jersey, where he leads up the firm's tax and accounting departments. With over 30 years of diversified public accounting experience, Clinger specializes in paper conversion and packaging businesses and has developed industry-specific financial courses in conjunction with AICC. He's also one of our CEO advisory group leaders and has quite a few of those that are active and working well, right? Mitch, here you go.
Correct. Hi, everybody. The laws of physics state that for every action, there is an equal and opposite reaction. The coronavirus has had a terrible effect on our economy and our society. But once again, it is good to be a box maker. Almost every state has basically said that packaging is an essential industry. So while I have lots of clients who are shuttering their doors, furloughing their employees, and just figuring out whether or not they can survive this, almost all of my box maker clients and friends are in business. Some of them are reporting actually business is really good. Most of you are starting to see a little bit of tail off in business, but right now things are really good in the box business. I have a bunch of friends who are bankruptcy lawyers. I used to do a lot of bankruptcy work, and the interesting thing to me is that the bankruptcy lawyers, all of a sudden, I'm getting emails and phone calls. These guys are circling like vultures. We'll get into the meat of the COVID-19 legislation, but one of the things you guys are going to have to deal with on a going forward basis is customer insolvencies. I don't know that there's going to be a lot of insolvencies among box makers or your suppliers, but I think you're going to have a problem with customers. And if any of you have been through a bankruptcy with a customer before, you know it's not a very pleasant process. And not only do you end up losing the amounts that they owe you, you also end up getting challenged on all the payments that the customer sent to you within 90 days of filing. So in addition to the planning related to this new legislation, I think all of you need to really take a look at your marginal customers and start making some tough decisions as to whether or not you want to continue to extend credit to them, whether or not you want to continue to make inventory on their behalf. And if I were you, I'd get out there and visit them, see if they're still operating, see what's going on, and try to be proactive, because bankruptcy could be a triple threat to you. You could lose your receivable, they could come after you for preference payments, and your inventory could end up being worthless. So anywhere where you have exposure with weak customers, customers who are paying very slow that you're worried about, you really need to take a hard look at them right now and do whatever you can not to let your exposure get any worse. All right, with that said, let's move into the meat of all this stuff. And by the way, you know, as I prepared for this webinar, I thought we were going to have 2 hours worth of stuff to talk about, but really there's a couple of key things we need to talk about. I know all you guys are busy, so I'm going to try to be as succinct as possible. I'm interested in your experiences and questions that you may have, and you also need to understand that there have been almost no regulations written on any of this stuff. So some of the fine details we're just going to have to take our best guess on at this point. I'll keep AICC updated on any new developments. And without any further ado, let's talk about what's new. So there's basically been two pieces of legislation: the Families First Coronavirus Act, and the key provision there was extending sick leave and family medical leave. The Coronavirus Aid, Relief, and Economic Security Act, also known as the CARE Act. And one of the key provisions there, which we're going to spend probably most of our time talking about, are these Paycheck Protection loans, which I think most of you, if you haven't considered applying for one, almost everybody who's on this call probably should. Which leads us into the third bullet point, which is the review of disaster relief programs for small businesses. And basically, there's the Paycheck Protection loan, and then there's an overall economic disaster loan that you can get with the SBA. We'll talk about recent IRS notices and actions, basically postponing filing dates and talking about the new improved IRS. And then hopefully we'll advance the slides. And then we'll talk about hopefully what can be some action planning for you guys. So the Families First Coronavirus Response Act, as I said before, expanded medical leave, expanded FMLA leave, and the good news is that there's a credit available. So if you end up having to pay this stuff, you can get a credit on your employment tax return. So let's talk about some of those details. So effective April 1st, so it was effective as of yesterday, you are now required to provide sick leave for any full-time employee who's been with you for 30 days. So this kicks in 30 days, irrespective of what your company policies are on sick leave. Full-time employees are entitled to 80 hours, 80 hours. And part-time employees, the equivalent number of hours that they work in a 2-week period. It's a little vague right now, and as I said, there's no regulation. So probably what you need to do is err on the high side here in terms of your part-time employees, if you have part-time employees. You also cannot require your employees to use any other time available before they use it. So if they've got accrued sick days or personal days, you can't force them to use them. Now, you have to get, you may be challenged on this. It's kind of a double-edged sword. You have to provide this benefit. But the IRS may at some point audit you, and you're going to need to get documentation from your employees as to why they're entitled to this leave, because you're getting a credit for it. So before you let anybody take this leave, you better get chapter and verse from them in terms of exactly what the reasons are. Sorry about that. Who they're taking care of, what the issue is. If there's a medical situation, you better get information on the medical provider and get the employee to agree that they're going to cooperate with you if this is questioned. Okay, so there are 6 situations for eligibility. I think they're pretty self-explanatory. If you read through them, the first 3, the quarantine, self-quarantine because of concern about illness or symptoms. Those first 3, you're going to have to give them 100% of their pay. And the second 3, as you'll see as we go forward, you're going to have to give them 2/3 of their pay. I don't think there's anybody has any questions on this stuff. It's pretty straightforward. Okay, so as I said, for situations 1 to 3, they're going to get paid their regular pay at their greatest regular hourly rate. So sometimes there are staggered rates that you have. You've always got to go to the highest rate. And for situations 4 to 6, you get 2/3 of that amount. The total benefit can't exceed $511 per week, or $51.10 in total for 1 through 3, and $2,000 for 4 through 6. And again, for part-time people, you can use average number of hours, etc. Having trouble with my mouse here, I apologize. And unused hours cannot be carried over to a subsequent year. So if this keeps going on, there's no carryover in any of this stuff. Okay, the other thing is that the Act expands FMLA benefits. So after 10 days of unpaid leave, you've got to give them 12 weeks of leave. 12 weeks. And it can be used to take care of children under 18, which I think is interesting. I would have thought it would have been a lower threshold. At 2/3 of the employer's regular rate, limited to $200 per day. Employees can use accrued sick and personal days to substitute for the 10 days of unpaid leave. So anybody who has a child under 18 who can claim to you that they've got to take care of them, you've got to provide this benefit for. That's the bad news. The good news is the employer portion of Social Security. So it's 6.2% Social Security and 1.45% Medicare. That's the 7.65% employer portion. The 6.2% can be reduced by these payments. So that's the good news. And if the credit is greater than the tax, it's refundable. So if you pay out $20,000 in a quarter and the employer portion of Social Security taxes is only 10, they will refund the extra 10. Okay, and you can also increase the credit for health plan expenses that you're continuing to pay for the employees during sick leave.
Mitch?
The IRS just came up, yes.
We have a couple questions here, and are you ready to take some?
Of course.
Okay, the first one is, do you recommend accruing the wages to be reimbursed for statement and tax purposes? My end of year is 5/31.
All right, give me that again. Should you accrue the reimbursement, the credit?
Do you recommend accruing the wage? Do you recommend accruing the wages to be reimbursed for statement and tax purposes? My end of year is 5/31.
I think you would have to. I mean, if it's a material credit that you're going to get, you should absolutely accrue it.
Okay, next question. I'm calling on Janice. I see your hand up. Janice, your question? Janice? Okay. Kevin Kesselring and then Martha Haddon. Kevin, do you have a question? Kevin? Okay, Kevin is saying he has a question. And Martha does not. Okay, go ahead. We're done.
That go ahead was for me? Okay, so if you're in a situation where you start to experience all this paid leave, you can file Irs Form 7200. And notwithstanding all of my spelling errors here, this is a form that can be filed multiple times, and you fax it in, and I've given you the fax number there. So this whole provision, while it could be a pain in the butt and you have to administer it properly, you should be able to get fully reimbursed through the employment tax credits for it. You have to provide notice. So every one of you should have notice posted in your workplace right now. It should have been posted as of yesterday. If your office is closed, you should be emailing the notice. You should be putting it on your website. You can be fined for not having the notice. They can exempt you if
we have another call, a question. Kevin, do you have a question? You've been unmuted. Kevin? Okay, I'm going to ask everyone to put their questions in the question area and not to raise their hand. So if you have a question, please put it in the question area and then we'll call on you. Thank you. Go ahead, Mitch.
All right, and I think the rest of this is explanatory, self-explanatory. Hopefully we'll get some regulations issued pretty soon to clear up any ambiguities. Okay, so the other thing that this act does is, where are we here? Okay, right, notice. Okay, so that's really it for the first act. It's all about expanded sick pay and family leave. The CARES Act had a lot more teeth to it. It was a $2 trillion act. $349 billion was set aside for these payroll protection loans, and we're going to spend a fair amount of time discussing those. There's an employee retention credit, which only kicks in if you've had a 50% reduction in revenue, which probably doesn't apply to a lot of you. There is some meaningful tax relief that we'll go over, and a postponement of certain tax payments. And then on the individual side, they're going to send checks to people, which we'll talk about. There's some provisions about retirement plans and some other tax provisions on net operating losses and interest expense that should benefit you. In general, this was a pretty good business-friendly law, one of the better ones that Congress has put in the last 20 or 30 years. Okay, let's talk about the employee retention credit. You get a credit for 50% of the wages of people you retain, but again, this only kicks in if you've had a 50% or greater reduction in quarterly receipts. If you are going to avail yourself of one of the small business loans and you can't take this credit, if you have more than 100 employees, you only get the credit for employees who are furloughed or face reduced hours. And again, the credit is equals 50% of eligible wages. I don't think this is going to have a lot of applicability for the converting community, but it's there if you experience a pretty significant drop in business. Okay, employer portion of Social Security taxes can be delayed. Again, that's that same 6.2%. You don't have to pay it. You can delay it until 1/1/21. Net operating losses, there were some significant reductions on the last tax act. The ability to use net operating losses, those have been repealed. Net operating losses were only available to be carried forward and only against 80% of your income. Now, if you had a loss even for 18, this is a retroactive. If you had a 2018 loss that you didn't carry back, you can now carry it back 5 years. So any of you who have already obviously filed their 18 returns and had a loss can now go back and prepare carry back returns, and the same thing with 19 returns. If you've got a loss, you can turn that into money. So any of you who had a bad 19 or had a lot of depreciation that created a loss, you can now carry it back and get some money. Excess business losses. So what this said is if you had a bunch of different businesses that netted together on your personal return and created a loss, that loss was limited to $250,000. That has now been repealed for now. So business losses that flow through to shareholders in excess of $250,000 are now deductible. So in filing your 19 returns, make sure that your accountant takes that into account. Anybody who's a C corporation who's been in the AMT, you can get those credits refundable. They weren't refundable previously. Interest expense was limited to 30% of taxable income, actually EBITDA for 2019 and 20. It's now been increased to 50%. So they're trying to make it easier for you to deduct your interest expense. And qualified leasehold improvement property, non-structural leasehold improvements prior to 19 were subject to 100% write-off. The new law said that they were back to 15-year property. Now they're reinstating that as 100% write-off. So if you build some non-structural leasehold improvements in your plant, you can write them off fully. They've also made it easier for charities, and as we'll see later, individuals to deduct charitable contributions. Okay, the individual provisions. Everybody whose adjusted gross income is less than 75,000 individual or 150,000 as a family, married joint, is going to get a $1,200 payment from the IRS, $2,400 for married couples, and $500 for each qualifying child. This is going to happen automatically. So most of your employees are going to be receiving checks from the government fairly soon in fairly significant amounts. So just make sure they understand that, and there's nothing that they need to do. The only planning point I'd suggest there is if you haven't filed your 19 return yet, it's going to be based on your 18 return. And there are these adjusted gross income limitations. So somebody who had higher income in 18 than they did in 19 should make sure they file their 19 return as soon as possible to make sure they maximize the ability to get these payments. Early withdrawal from retirement accounts. They're going to waive the penalties for up to $100,000 of distributions. So any of you who are experiencing business problems and have significant funds in retirement accounts that they'd like to tap into, you can now take that money out without penalty. It's still income, but no 10% penalty. And you can actually say, look, I'm going to repay that distribution, and you have 3 years to repay it. So you can pull $100,000 out of your retirement accounts today, not pay any income taxes on it for 3 years, or pay no income taxes at all if within 3 years you can pay it back. So that's a pretty good break. They're trying to give all you guys some more flexibility and some more liquidity. They're also going to give you more flexibility on loans from retirement plans up to $100,000. They've been very tough on those, on the ability to take loans. So you can take a $100,000 distribution, treat it as a loan, and you can take a $100,000 loan. So potentially you can get $200,000 out of your retirement plan to inject liquidity into your business, or whatever situation that you need with respect to this virus. Now this is a big one. Required minimum distributions are waived for 2020. So, I mean, the general rule of thumb is you want to delay distributions from pension plans as long as possible because they're taxable. There are required minimum distributions based upon your age. So if you're over 70 and a half, which they've actually increased to 72, you don't have to take your 2020 distribution, which will save you a fair amount in tax dollars, depending on what's in your plan. They're going to give everybody a break, $300 in charitable contributions, and they're not going to limit individual charitable contributions to 50% unless you're trying to put it into your own private foundation. This just came out also in the CARES Act. They're going to increase the unemployment compensation payments by $600 per week, which is rather incredible to me, and add, that says 3 weeks, it should say 12 weeks. I apologize for that typo. I'll fix that up on the final. 12 weeks beyond. So they're going to add 12 weeks to whatever state unemployment is and add $600 to it. Okay, so that's basically all the rules and regulations of the two acts.
Mitch,
Let's take a little, yes.
we have a few questions from what you were talking about.
Okay.
The first one was relevant to when you were talking about the Medical Leave Act. Does Situation 2 cover employees if they want to self-quarantine, isolate without a medical professional's recommendation?
Okay, so let's go back up to that. So Situation 2, a healthcare provider advised the employee to self-quarantine. I think that's fairly self-explanatory. They need some proof that they called their doctor or they got some advice from a healthcare provider.
Okay, next question. We did an extensive renovation of our design and customer service center. Does that qualify for the 100% write-off?
And the answer is, as long as there is no structural component to that, it should.
Okay. Does the RMD waiver apply to decedent IRAs?
Decedent. So it's you're talking about an inherited IRA?
Does the
And the answer
RMD
is
waiver?
Yeah, the required minimum distribution waiver will apply to a minimum distribution from any plan, whether it's an inherited IRA or your own IRA or a corporate plan. So the answer is yes, it should apply.
Okay, that's it.
All right, so let's take a look at the two disaster relief programs that are available. The first one is the Paycheck Protection Program. Applications for this are due tomorrow. At least I shouldn't say due tomorrow, but tomorrow is the first date that they can be accepted by the SBA. And I would imagine that the banks are getting inundated with these applications. They apply to any employer with less than 500 employees. So that's most of the independent box making community, other than some of the companies that have very large or multiple plants. You can receive up to $10 million, 250% of monthly payroll costs with interest capped at 4%. So if your monthly payroll costs, which is the payroll itself, the payroll taxes, the state payroll taxes, and medical insurance are $200,000, in theory, you can apply for a $500,000 loan. Now, they base it on 8 weeks of payroll, plus you can pay rent, you can pay mortgage payments and utilities with these funds. So you have to be a little bit careful about what you use the funds for. Next bullet says salaries, commissions, regular leave, as well as mortgage, interest, rent, and utilities. But you have to limit compensation to $100,000. So if somebody's on the books for more than $2,000 a week, you're going to have to limit that. It applies retroactively to 2/15. So the first decision you're going to have to make. Well, let's get through the rest of it, and then we can talk about the decision. So the way this works, the SBA is going to give a 100% guarantee to the banks on these loans. So the banks will not be required to set aside any additional capital for them, and the banks absolutely have no risk on these loans. So there should be no pushback from your bankers on collateral, on covenants, on any of that stuff, because the SBA is just basically taking all that off the table. Now, the key to this loan is you can apply for loan forgiveness, right? So you get that $500,000 loan, and then it's a 4% loan, but I believe effective 1/1/21, you can apply for forgiveness of the loan. And it's going to be based upon you're not having reduced your workforce or your pay. So basically what they're saying is, if you compare the 8-week period after you receive the loan in terms of full-time employee counts, you get to compare that to either the February 15th to June 30th period, or January 20th to February 29th period. And as long as you can show you still have the same full-time equivalent employees, the entire loan will be forgiven. So for all of you who are still operating, who are less than 500 employees, I mean, this is an absolute no-brainer in my opinion. The cancellation of debt will not be income to you when it happens. So there's really very, very little downside risk to you. So really what you guys need to do is put together a spreadsheet of what your payroll was during those two periods, February 15th to June 30th, 19, and January to the end of February of 2020, right? And compare it to what your payroll looks like now in terms of any of your decisions to reduce headcounts or reduce hours. And try to manage it in such a way that your full-time equivalency stays greater, equal to or greater now for the 8 weeks after you get the loan to where it was before. So if you've already furloughed people or laid people off, you still have an opportunity to bring them back to maximize your ability to get this loan forgiven. So these are some numbers you really need to start crunching immediately. Covered loans will have 10-year terms to the extent that they're not forgiven and fully guaranteed by the SBA. So even if you can't get the entire loan forgiven, it's a 4% 10-year loan, and it really, really is something you need to look at.
Mitch, we have quite a few questions here.
Okay.
How do you prove where the money was spent?
Well, the burden of proof is going to be on you, but they're basically going to ask for copies of your payroll records and probably your disbursement records.
Okay, next
So the burden of proof will be on you, but I don't think it's going to be too tough to prove, you know, what your payrolls were and that you paid your rent and utility bills.
Okay, does the 100K include benefits, healthcare, etc.?
And the answer is yes.
Okay.
And you're saying the 100,000 in the hypothetical example that I came up with, yes.
Okay, most updated info, the loan interest is now 0.5%. That's not a question.
Okay, that could be.
Okay,
I'm glad to hear that. I will put that.
Do you add employee FICA expense to gross payroll to compute average monthly payroll? That's all it says.
No, just the employer.
Okay.
Not the employee.
If we take a loan out for 40% less than the total amount we are eligible and reduce our workforce 40%, do we get 100% of the loan forgiven?
It's a mathematical calculation. I mean, it sounds like. So let me think about that. So you're saying your payroll is $100,000 a month, and instead of applying for a $250,000 loan, you only apply for a $160,000 loan. And so then the question is, if you only apply for the $160,000 loan and you lay off 40% of your payroll, will that loan be forgiven? As I understand the question, can we get a yes as to whether or not that's what the question is?
I can unmute him, or he can go ahead and post in the. Stuart, do you want to? I'm going to unmute you. Can you ask the question? Are you?
Can you hear me?
Yes, Stuart.
All right, cool. Yeah, the answer is yes to that, Mitch. So I guess what I'm using 40% as an example, but I guess I wanted to know if we apply for that one, let's use the 160 like you were saying, and we reduce it 40%. Will they take 40% off the 160, or are they just considering it 100%? Is 160 already taking the calculation of 40%?
And the answer is they haven't issued any regulations yet on this, obviously. What you're suggesting, Stu, sounds like a very sensible approach. But I think the spirit of this is that they want to make sure that you don't lay people off. So if you ask for less money, that's your business. I think at the end of the day, the forgiveness is going to be totally based upon having the same or greater full-time equivalents. I don't know that for sure, Stu. Well, I'll make a note to take a look at that, but there's no regs yet.
Okay, I'm muting Stu. Next question. You said you need to recall furloughed workers. Is this so they get the full benefit of payroll?
I didn't say you need to recall. I'm saying that really you need to go back and set up these spreadsheets for the February to June period and the January to February 20 period. See what the full-time equivalents were in those periods. See what your full-time equivalents look like on your current payroll. And if your full-time equivalents currently are lower than either of those periods, and you have already furloughed people, you might want to bring them back prior to taking out this loan.
Okay. Does the business need to demonstrate need to qualify for the Paycheck Protection loan? For example, a reduction in revenue.
No, not to my knowledge.
Okay. Will the LHIMP write-off apply if we spent the money in a tax year that ended on 10/31/19?
I'm not. Will the what write-off?
LHIMP.
Leasehold improvements. All right. So give me that again. Will that write-off?
Will this apply?
Give me the question again.
Will it apply if we spent the money in a tax year that ended on 10/31/19?
I don't think so.
Okay.
But I will double check that and you can get an answer. I think it's only for periods that end after the enactment.
Okay.
So that's a good question. Is the leasehold improvements retroactive to the previous year? Okay,
Okay.
I'll get an answer on that.
If your business is only slightly negatively impacted, do you still qualify?
I believe that you do. But you have to read through the application and be careful about listening to it. I believe there is a question on the application that says, has your business been impacted? And you have to answer that question honestly. I think going forward, the impact is going to be even greater than it is now.
Mm-hmm.
So I would err on the side of, if you've had any impact at all, I would go for it.
Okay. Can you include the employer 401k match as payroll costs when determining loan amount?
I believe so.
Okay. Somebody.
I'll double check that too. Not clear.
Okay.
So employer match on 401k.
Can you confirm this? Can you confirm this? While Congress could approve more money later on, the program as it stands is expected to run out quickly. That could mean applicants who have the financial and legal expertise of a larger organization might be able to maximize their benefits, not leaving much for smaller businesses, especially those who wait or have problems applying.
Well, I believe it's going to be on a first-come, first-served basis. It only applies to businesses with less than 500 employees. So there's not going to be any, particularly large companies involved. So it just behooves you to make some calculations and get this application in tomorrow. Your banker will then contact you to go over these details. So this is a time of the essence thing, and just be sure you're at the head of the line.
Okay. What happens if you don't have a reduction of 50% in revenue?
Well, this particular program, the Paycheck Protection Program, has nothing to do with 50%. The 50% reduction only applies to the credit you can take, the employee retention credit. So I think you're mixing up an apple and an orange.
Okay. I want to say,
for this with it.
Go ahead. Did you have something else to say?
Nope.
Somebody is not muted and I can't mute you, but you're typing and we can hear it. So if you know that it's you, please mute yourself. Is there any prepayment penalty if we pay the unforgiven loan early?
I have no idea, but I don't know why you would.
Okay.
Well, I guess maybe to save the 4% interest, but I'll double check that also. Again, there's no regulations written on this yet. So I'll make a note of that, prepayment penalties, and I will get you an answer.
What documents may be required to prove average monthly payroll? Will they look at 941 filings or something else?
Certainly they're going to look at 941 filings. But 941 filings in and of themselves won't have enough detail because basically you just report the number of employees the first month of the year and the gross wages. So while the 941s will be part of the equation, you're gonna have to show your detailed payroll records.
Okay. Is this first come, first serve? I think you answered that.
I believe so.
Okay. Does it disqualify a company with less than 500 employees if they have a partial owner that is not a small business? The company in question is a separate legal entity.
Well, there's verbiage in there about affiliates. When you fill out this application, you have to give a list of all affiliated companies. So if you aggregate all the companies and you're over 500, I don't think you apply for, you're gonna qualify for this.
Okay. And last question. And for the 941 filings, is it from April 2020 or prior to now?
Well, again, you're going to have to prove for the 8 weeks after you get the loan that your full-time employment equivalents are greater than those two periods, right? So the answer is you've got to evaluate February 15th to June 30, 19, and January 1 to February 29, 20, which is, they're parts of different 941 periods. So you've really got to get into your payroll records and see what the hours look like during those periods.
Okay. If your company is 100% owned, I already did that one. Our banker is requesting our 2019 tax return to be submitted with our application. Is this correct?
You mean I'm not sure what tax return they're talking about. The second quarter 941, is that what you're saying?
Jen, you'll need to give me more information. Can I unmute you? If I will. Jen?
Yeah, our banker is requesting our 2019 1120 tax return to be submitted with our application.
Which may or may not be done yet, right?
It is done, but he's saying to verify the payroll costs, which it's going to be kind of hard for him.
It's like the Wild West right now, Jen. Nobody knows what you're going to have to produce to prove it. So I would err on the side of, hey, if he asks for it, let him have it. I don't know what good it's going to do him.
Okay.
All it's going to show is employee compensation, but if you have it done, I would certainly send it to him. Believe me, that you're going to need to show them more than that when the time comes.
Okay, thank you.
Thank you, Jen. Next question. Is it true if you do have any furloughed employees, you will not qualify?
And the answer is that's not true because you haven't gotten the loan proceeds yet, and it's the 8 weeks after you get the loan. So if you have furloughed employees, you can bring them back.
Mm-hmm. If you pay it off early, will you lose the forgiveness?
I don't know. But again, I'm not sure why you'd want to pay it off early if it's going to be forgiven. So I will get an answer for that, Taryn, and we'll post it in an update to this.
Okay. Will Mitch join? Oh, will you be available to be on the AICC video conference tomorrow at 2 o'clock?
Yeah, I think Mike asked me to be on it, so I will, yes.
Okay, great. 3 years of federal, 3 years of financials, 3 years of personal returns and personal financial statement. That's coming from Al Hoodwin. There is no question. Al, I'm unmuting you. Can you speak to that? He's not. Al? Not hearing him. Okay. If you have employees who are above
So what was
3 years
what was
of,
that question?
it wasn't a question. It said 3 years of federal, 3 years of financials, 3 years of personal returns and personal financial statement is what, oh, he added, that is what is needed for business paycheck protection loan.
Well, that's what his banker asked for. There's no rule that says that that's what they need.
Okay.
But you know, every bank is going to have to verify this. It's again, and there are no regulations written. But if your banker asks you for that information, I would provide it to them.
Okay. If you have employees who are above the $100,000, would you just back out any amount paid over that for any employees to calculate your loan request? And I believe, Mitch, you may have answered, but do you add employer Social Security or 401k match to the gross?
Okay, the employer FICA, yes. The 401k, I'm not sure about. I'm going to get an answer on that.
Okay. And your turn now, Mitch. No more questions for now.
Okay, so the other kind of loan that you can get, and this one you really have to be able to document that you suffered substantial economic injury, or the economic injury disaster loan. Now this is one that you can just go right to the SBA website and make the application. They'll let you know in 2 weeks with a disbursement 5 days after that. So if you're a company that, you know, you're not in a position where you're going to be able to keep all your employees on the payroll under any circumstance, so the Paycheck Protection loan doesn't make sense for you, and you're having trouble paying your bills, you can apply. You can and probably should apply for one of these loans. They're not going to be forgiven, but it's a 3.75% interest rate. I believe it's also a 10-year term, and you know, it can inject $2 million of business of working capital into your business within a couple of weeks. So again, if you're not, you know, if the payroll protection loan doesn't make sense for you, you should absolutely consider EIDLs. Again, fully SBA guaranteed. This loan, they're going to have to do a little bit more in terms of pay it back. I was surprised about what the bank.
Mitch, hold on a second. We can't hear you. Are you there, Mitch?
All right.
All right.
Am I unmuted?
Yeah, you're back on, but I don't see your screen.
You don't see my beautiful face, huh?
No. I see your face. I don't see the screen. Your presentation.
You don't see the screen.
No, the presentation itself. I just see you.
Do you see my granddaughter?
No, just you. Let's try this again.
I'm not sure what just happened.
Did you get a pop-up that says presenter again? Please bear with us. Something happened with the system and we're trying to.
Can everybody still hear me?
Yes.
All right, then forget about what's on the screen. We're really kind of to the end of the program anyway. And we can just discuss it without the screen because I'm not sure how to get the screen back. So I just want everybody to know, if you haven't heard already, all federal income tax returns have been delayed until July 15th, whether they're corporate returns, individual returns, all returns are delayed till July 15th. Every state that has an income tax, to my knowledge, has also complied. Some of them aren't July 15th, some of them are June 1st. So you need to check with your individual state to make sure that that's been postponed. Estimated tax payments have been moved back to October 15th. Gift tax returns have been moved back to July 15th as well. And the IRS they issued, it's interesting, they issued this IRS notice 2020-59. They call it the People's First Initiative. And basically they're claiming that they're going to be a kinder, gentler IRS with broad authority to accept offers in compromise, delayed collection enforcement, and greater ability to waive penalties. So if you have any situation, or you know of anybody who has a situation where they owe money to the IRS, this is the time to try to get it resolved. They've gone on record saying that they're going to do everything they can to work deals out with people who owe taxes. So I just wanted to get that out there. Whether it applies to any of you or not, or if you just know people who are having trouble paying their taxes, this is the time to try to settle that stuff. So let's just talk about what it is that you guys might want to do in relation to what's going on with coronavirus. And I think the most important thing you have to do is consider whether or not to apply for a Paycheck Protection loan. And if you're going to do it, you better do it today. If you don't think that's the right move, then consider the EIDL. I think those are the two most important decisions that you have to make. Number three, if you're going to go for a Paycheck Protection loan, you better start looking at your full-time equivalent hours immediately to make sure that you're not going into this situation without a high likelihood of full forgiveness of that loan. So those are the critical decisions you have to make today, tomorrow. The Federal Reserve has instructed all banks to offer deferment programs for people with mortgage payments, any kind of loan payments. So if you're at all concerned about your cash flow right now, call up your banker and tell them you want a 3 or 4 month deferral of your payments, and you are likely to get it. Okay. Once this family leave stuff starts kicking in, the FMLA and the sick leave, get a hold of Irs Form 7200. You can download it from the internet and start filing this thing as you're paying out significant funds, so that you don't go too far into the hole. As I said earlier, be very careful with weak customers right now, because the bankruptcy rules are not favorable to unsecured creditors, which is what you guys are. So if one of your customers files, you're going to take a mega hit, and you really have to take a look at that now and be proactive. You should all be preparing pro formas on your business with 10%, 20%, 30% reduction in sales, and see what it looks like. You should also be looking at your customer bases to see what percentage of your customer base are essential industries like you. The ones who are in essential industries are likely to continue buying, and the ones who are not in essential industries are likely to be greatly diminished. And I think you really need to get that pro forma done sooner rather than later. If you're in a situation where you're taking minimum distributions from your retirement plan, stop doing it. Even though the filing for tax returns is postponed, and this is self-serving as a CPA, get your taxes worked up. If you're in a refund situation, file them immediately and get your refunds. If you owe money, at least you're going to know how much you owe and you have time to plan for it. And finally, for those of you who are in family businesses and are in situations where you're considering some wealth planning, ownership planning, transferring assets to the next generation, this is a great time to start effectuating those transfers. Anytime there's a business downturn, there's an opportunity to get lower valuations on your businesses and effectuate wealth and family planning. With that said, that's all I have. Taryn, any further questions?
Oh, yes, we do. Do the detailed payroll reports need to be broken down by employee? Is there a benefit to go through your current lender, or does that matter?
I don't know what backup the bank is going to ask for, but chances are you're going to need the reports by individual to prove it. And you're going to have to tie those reports ultimately into 941s. So yeah, 941s are going to be a part of it. Detailed payroll records are going to be a part of it. And nobody knows exactly what the banks are going to ask for, but that's my conjecture. And what was the second part of that question?
Oh, I'm sorry, I deleted it. Can you post again, please, the second part of your question? I'll go on to the next question. If a company has an employee above the $100,000, would you just calculate your payroll based upon backing out the amount above that 100,000 cutoff level?
Yes.
Okay, next question. We are a small company of about 30 employees. When will the FMLA regulations come out for companies under 50 people? We are starting to have employees believe they can voluntarily take off and collect unemployment.
They said that the regulations would be out in 15 days. They should be out, if not today, tomorrow.
Okay. Have all the regulations for under 50 employees gone by the wayside?
I'm not sure I understand the question. I think we're in a new world now, and that these regulations right now supersede the old regulations. I mean, under the previous regulations, you didn't have to give, you had your own policy as to when you could give sick leave. Now, anybody who's been employed for 30 days is entitled to this. So I would say the answer to that question is yes. I mean, these regulations right now supersede what came before, and will until they withdraw them.
Okay. Is there a benefit to going through your lender, or does that matter? That was the question that was.
I see. And I think you're always better off staying with your existing lender. It makes them easier to deal with. But there's no absolute requirement. So if it were me, I would certainly, deal with my existing bank. But if there's a new bank that you're trying to get into bed with, and you want to do this loan to them, I don't think there's certainly no issue with it, except it may annoy your existing bank.
Okay. If there are any other questions, go ahead and post them in the chat box. We'll give it a few more minutes. Is the $100,000 cap included? Does the $100,000 cap include the 401k match and tax, or is that added to the total?
I believe that 100,000 is just salary, but again, that's something I'll have to check on. I have 3 other things I'm going to check on, one of which already relates to employer match. So I will find that answer out for you guys, how employer match factors into this. Okay, well, Mitch, we're right at 2:57. There are no other questions. I really want to thank you for taking the time to do this. It's invaluable. It really is. And I think our members, with 83 people on the call today, or 87, I'm sorry, I think they saw a lot of value in it too. So I greatly appreciate all that you did. And we look forward to having you on the call tomorrow. All right, very good. Thank you very much. Have a nice day, everybody. Bye. You're welcome.